Turning $100 into thousands of dollars trading is possible if you use the right strategy, the right creativity, and a little bit of luck on your side. So in this video, I'm going to show you exactly how to start trading with as little as $100. By the end, you're going to have a complete understanding of what strategy to trade, what time frames to trade, the risk management to use, and the different options you have available to you if you only have $100 to trade. So let's waste no more time. Let's dive right into it. Like right now. Why are you still here? So when trading a small amount of money like $100, you got two options. Trading your own money, meaning the $100 you have or whatever amount you have, or trading other people's money or OPM. These are the two options that you have available to you. So in this case, you would be trading $100 or again, whatever amount you have. It doesn't have to be $100. And in this case, you don't necessarily need to trade with the $100. You can actually get access to, let's say, $100,000. How is that possible? I'll explain. Don't worry. We're going to get into it. But these are the two options you have available to you. Trading your own money or trading other people's money. Now, obviously, there are pros and cons to both of these, but I'm actually going to show you a way that you can have the best of both worlds. Now, before we dive into the fun stuff like the strategy and how much money you can possibly make and how to actually make the money, you are going to need a broker that offers high leverage. So for crypto trading, I use BitUnix for high leverage futures trading. You can trade Bitcoin on 125x leverage, which is perfect for a small account. And they offer some of the best data that I've ever seen. They have really nice charts that are pinpoint accurate, which feels really nice when you're trading, especially on smaller time frames. And for Forex, I use Liquid Brokers, which is a regulated Australian broker. Both of these brokers are pretty good for trading a small account, especially in the way that I'm going to show you in this video. So if you're trading crypto, BitUnix, and if you're trading Forex, Liquid Brokers. And the benefit of signing up with those links is that you do get offered some trading bonuses as well as direct support from me. So if you have any sort of issues with any of these brokers, just leave a comment or contact my email and I will literally get direct support to you. So, okay, let's move on. Now let's talk about leverage. The reason why you need high leverage, especially if you are trading YOM, your own money, is that you are going to only have a small amount of money. And how do you get access to a larger amount of money? In the trading world, it's always going to be, well, not always, but in this case, it's going to be leverage, which just means that the broker gives you money to trade with based off of the amount of money you have to trade with. So both of the brokers that I mentioned offer over 125x leverage, which means that if you deposit $100, you can technically trade up to 12,500. And with Liquid Brokers, they offer 500 to 1. So in that case, it would be $50,000 that you can trade with. Now, this is extremely risky. Don't go and start maxing out your leverage by using all of this money to trade. But basically what this allows you to do is take bigger position sizes that you wouldn't be able to take if you only had the $100 to put on the trade. Because if we were to trade without leverage, and let's say we're trading on a 15-minute time frame, this $100 is not going to go very far. Because if you put $100 into Bitcoin on the 15-minute time frame, guess what? Bitcoin may move, 0.05% in the next 15 minutes or so. And obviously 0.05% of $100 is basically nothing. So if you want to risk, for example, $50, then you're going to need leverage. Okay, so that's how leverage works. I hope that makes sense. Okay, so now that you have a broker and you've made your first deposit of $100, $1,000, maybe even $10,000, now it's time to have a strategy in place, and this strategy is going to be applied whether you are trading $100, $1,000, or you're trading other people's money. First thing that I want to get out of the way is you are not going to want to trade multiple time frames. You are going to want to trade one time frame, especially if you're trading with $100, because that means that you're probably a beginner, and let's face it, you probably shouldn't even be trading. But if you must, only focus on one time frame. Why? What is the logic behind this? Because a lot of people are going to say in the comments, you got to look at the daily charts and figure out the key levels and the hourly charts and the 4-hour charts and the monthly and the weekly charts. Listen, every time frame is basically its own chart. So if you are trying to predict 5, 6, 7, 8 different time frames, you're basically trying to read 5, 6, 7, 8 different charts. Do you think you're going to have a higher chance of predicting 8 charts and the direction that price is going to go, or just one? So we are going to focus on one time frame, and the time frame that I like to choose for small accounts especially if you're a beginner, is going to be a 15-minute time frame. The reason for this is because the 15-minute time frame is a good balance between not having to wait too long for your trades to play out, because we need a high amount of volume, right? We need to be constantly trading if we're trying to grow an account quickly, but also you're not going to get destroyed by the fees that you'll incur if you try to trade the 1-minute time frame or even the 5-minute time frame. Both of those can be difficult to trade, especially if you're using a small amount of money. Now that we got that out of the way, let's talk about this strategy here. So the strategy is going to be fairly simple but effective. It's going to be, first, obviously, you're going to identify the trend. This is very beginner stuff. So an uptrend is very simple. It's going to be higher highs and higher lows, and a downtrend is very simple as well. It's going to be lower lows and lower highs. So let me just cut to the chase and get right into the strategy. You're going to identify the most recent swing that we are in. So for example, if we're in a downtrend, you're going to identify this swing right here, the most recent, which is going to be marked out by this high and this low, okay? So in this case, let's take a look at this chart currently. We are in the middle of this swing low right here, okay? Why? Because we have higher high, higher high, and lower low, okay? So that means we are now in a downtrend. So this is our swing that we want to be trading. Okay, so we're going to identify that right there, and now we know that we have to be trading in between these 2 points. Now, because we are in a downtrend, we are going to look for a short position, a short trade. Now, how are we going to figure out where are we going to actually short the market, meaning we are betting against it and we're going to make money on the way down? Well, we're going to look for what's called a supply or demand level within this most recent swing. So in this case, it's going to look something like this, and I'll explain why. Here is a level of supply, aka resistance, aka a point where the market may reach and turn around, okay? The reason why this is an area that the market may reach and turn around is because if you look to the left and look at this area, you'll see that we had buyers coming in, marked by these green candles right here. Okay, buyers came in, and then all of a sudden the market absolutely took a dump. That means that there was an imbalance between buyers and sellers at this point right over here, okay? This candle, you can clearly see this big rejection candle, and then we went straight lower. So basically what ends up happening is that there were so many sellers in this area that 2 things are happening. The buyers are losing tons of money on this drop here, and the sellers weren't able to fill all of their orders. There are still sell orders sitting in this area because there was such an imbalance that price moved so quickly, those orders could not get filled in time. So there are orders sitting here that are sellers, and there are also orders from the buyers that are losing so much money from that drop that once price reaches back up to this area, everybody that bought in this area is going to probably get out. What would you do if you had bought in this area right here and saw this giant move right here? Well, if we get back up to this point where you bought, you're going to be getting out of that. And the only way to get out of that is by selling your position. So I think you can see where we're going here. We have sell orders from sellers and we have sell orders from buyers sitting in this blue box here. So this is what we call supply. Now, if we were to turn this on its head and, this was a big move higher from this area, it would be the exact opposite. Now, the sellers would be losing money. There's unfilled buy orders in that area. And I think you get the point, right? So it's basically just an area where we saw a big sharp move away from, if I had to dumb it down to, 5-year-old level learning. Okay, so this is the area that we are going to be using as our entry point. So we are going to place a trade right at this area here, and our stop loss is going to be above that area because we shouldn't be able to break it, right? We're in a strong downtrend. There's an imbalance in this general area here with a lot of sell orders. So if we break that, we probably don't want to be in the trade anyways. So that's going to look something like this. Our entry point is right before that area. Stop loss is going to be above that area. And then we are going to target another swing lower, right? Because we are in a downtrend. So we should probably target, if we're selling on a pullback, we should probably target a new low, right? Simple logic. So let's target these lows down in here, place an order right in here, and let's put that right there. And stop loss goes above these highs. Take profit goes to these lows over here, and let's see what happens. All right, so as you can see, we saw that nice reaction in that supply level, almost got stopped out. Sometimes that happens. But now, just for the sake of this example, we also created a new level of supply. If you take a look right over here, the same thing happened. We saw the buyers in this area formed a tiny small buying wick and then a huge move lower. So this is now our new area of supply. And so technically, this could be a trade right here as well. If we weren't already in the trade that we are in, this could also be a trade, and let's see what happens in this general area. Okay, and there we go. This is just an example, but this is a great example of the effectiveness of this strategy, and it works very well for trading small accounts because you're always buying or selling in an area where there is an imbalance of buyers and sellers, so you have a strong likelihood of seeing some sort of reaction, and so your stop loss can be very tight and your take profit can be very big, meaning you got a big risk to reward. All right, now let's take a look at a buy example where we are not looking for supply levels, but we are going to be looking for demand levels. Basically, if you know what support and resistance is, supply is always going to be resistance and demand is always going to be support. They're interchangeable. They're just different theories behind why price moves in that area, but they're basically the same thing as far as how price should react in that area, okay? So in this case, you can clearly see we're in an uptrend. We're making higher highs and higher lows. Let's take a look at this level right here. You can clearly see this is an area of demand, which is going to look something like this. We saw a huge move up and away from this area, which means there was an imbalance in this little consolidation here. And so the trade is going to look something like this. We are going to be buying just before that area or on the area there. Our stop loss goes below those lows, probably right around here is good. And our take profit is going to be all the way back up to these highs. So that's a 3-to-1 risk to reward ratio. Now let's place our buy order there, put our stop loss in the proper place, and let's see what happens. Take profit back up here. Okay, let's check it out. Okay, so there is a buy example of how the strategy works. Uptrend, we had higher highs, higher lows. A level of demand was formed within the uptrend, and we simply bought in the level of demand following the trend and riding it higher. So that is the strategy that I would personally use if I were to trade a small amount of money. In fact, it's even the strategy that I use to trade large amounts of money. It's basically universal. It doesn't matter how much you're trading. Now, something that I should mention is that you are not going to want to just watch this video and go immediately start trading this strategy with live money, okay? You're going to want to use some form of practice accounts, like TradingView, for example, has paper trading, and you're going to want to first trade with fake money, okay, demo money, whatever you want to call it, and prove that you can actually trade profitably before you go and even touch a live account, okay? The rule of thumb is that if you can trade profitably for 3 months straight by the end of the month, okay, so each month is a green month, that means that you should be ready to finally start trading a live account. 3 months of profitable trading, and you are probably going to do okay, at least when you go trade live money. And again, you can use TradingView for this. You can use the paper trading function built into their trading software so that you don't have to risk any real money. Okay, so now you have your broker, you have your strategy, you've back tested your strategy, you've tested yourself by trading demo money first, you've proven that you can actually trade. Now it's time to actually start trading your real money, right? So on option number 1, you are going to risk 10% of your account per trade. That is going to be $10. So you are risking $10 per trade. Now, if you use the strategy that I gave you, where you're on average, you're basically risking that $10 to make $30, for example, because we have a 3-to-1 risk to reward, you can basically double your account in a few days of good trading. So a couple weeks go by, you're risking 10% of your account per trade, you're trading pretty well, and let's say you get to $500, okay? So you 5x your account. If you haven't blown it, that is, because you are risking a huge amount of your account per trade, and so the likelihood of you blowing it before actually reaching a large amount of money is going to be pretty small. I'm not going to lie to you. That's why I don't really like option number 1, but we do have more options, so don't worry. So once you have the $500, you're going to pause, and we are going to come back to those $500 in just a moment. Now that brings us to option number 2, which is also a very risky option, but there is a third option that will be the best of both worlds. So just keep watching and bear with me here. It doesn't really matter which one you choose. It's all up to you and your risk tolerance and all that. But in option number 2, you are basically going to be at the casino, because let's face it, trading with $100, you're pretty much gambling. Whether you're risking 10% or, let's say in option 2, risking 100% of your account per trade, you have a high chance of blowing up your account. So personally, I prefer just going all in, basically betting on black and hoping for the best. It doesn't sound like the best trading strategy. There is no secret strategy that is going to turn $100 into $1 million. If anybody has told you that, I'm sorry, it's just not true. So you're going to take the $100, and again, trading the strategy, we're going to risk $100 to make $300 in this case. We're betting the whole account, okay? So the reward to risk, it's going to be a lot of reward for a lot of risk. Now you're going to have $300. If you are into a lot of risk, you could bet that $300 on the next trade. Now, the reason why I think this method is better is because personally, I don't mind if I lose $100, and I'm more confident that I could win 2 trades in a row rather than, survive risking 10% multiple times over a long period of time. Is the risk higher here? Yes, but so is the reward. And again, I'm more confident that I could win 2 trades in a row and do this, right, than I am doing this. So theoretically, now you've turned your $100 into a few $100s, or you've blown your account. Let's face it, you can always make another $100 and try again, okay? If you can't make even $100, it's going to be really hard for you to trade. I mean, just being honest. Now you have opened up yourself to some options, and that is going to be number 3. So up until this point, we have been trading our own money, okay? Your own money, YOM. Now, it is time for us to trade other people's money, OPM. And if you followed either strategy 1 or 2, now you're going to get the best of both worlds, because using the money that you made trading your own money, you now have, say, $500, $600, $700, $800, $900 that you can actually invest into yourself by gaining access to other people's money by purchasing a challenge account from an online prop firm. If you don't know, a prop firm is basically a company that will, say, charge you $100 in order for you to take a challenge, and if you pass the challenge, the trading challenge, then you gain access to, let's say, $10,000 of trading capital, and they split the profits with you. Usually it's going to be around 90 to 95% of the profit you get to keep. So now that you have a few $100s, what I would do is go to one of these online prop firms and purchase a funded account. Now, full transparency, I am a part owner in this business, which means that if you do use it, again, you have full support from me personally. There are a lot of prop firms out there, but obviously the one that I am a part of, I'd rather, give to you guys, because if you have any issues at all, I can personally take care of it, okay? But there's something great about this prop firm, which is why I'm a part owner in it, is that they offer something that a lot of prop firms do not, which is instant funding, meaning that you don't have to pass a trading evaluation in order to actually get access to the trading accounts. Now, there are rules that you have to follow, like total max drawdown. You can't lose more than 7% of your account total, so don't go risking that 10% strategy. We're not doing that anymore. And you do need to make a 10% gain in order to be eligible for a payout. But that's pretty much it. So it's pretty awesome. You can literally get access to instant funding and immediately begin trading real money that you get up to 95% of the profits while trading. So the logic is pretty simple, and it doesn't matter if you use this prop firm. Basically, the idea is that at first you're pretty much gambling, let's be honest, right? You're trying to turn that $100 into a bigger amount. But once you actually succeed in doing that, you can now give yourself some options by going to these different, prop firms and getting access to an actual trading account for relatively cheap. So for example, you can go and start trading a $10,000 account today. So if you have the $900, you're only going to be spending $260 of that, and you're going to be able to trade $10,000 worth of capital, okay? If you want to go balls to the wall, you can do $50,000, and that's going to be more expensive. And if you have a smaller budget than that, then you can do the one phase, which is you basically have to trade on a demo account first and pass that evaluation, and they'll give you the money to trade with, okay? So now that you've purchased your funded account and you've passed your challenge, or you got the instant funding, now you're going to have other people's money to trade with, right? So now you actually have access to, say, $10,000, and you're basically now going to trade, again, the same strategy, but you're going to risk less capital, okay? Now you're going to be risking, let's say, 1% of your account, because now that amount is no longer, $10, or with $100, that'd be $1. Now you are risking $100 per trade, which is basically like if you were here, which again, earlier we were risking $100 a trade and we only had $100 to trade with. Now we're risking $100 in trade, but we have $10,000 to trade with, so it's only 1% of our account, which means that we are way less likely to actually lose money now. So now here's where it gets interesting. Let's say you manage to make 10% on your account trading other people's money. Well, that is going to be $1,000, okay? Now you have the option to withdraw that $1,000, and if you want, theoretically, you could go and purchase a bigger account. Let's say, for example, a instantly funded advanced account, which is $800. That is going to be a $50,000 account for $800, okay? So now we have basically taken our $100 and turned it into $50,000 of trading money that we can now trade with. And now here's the best part. We're going to risk 1% again per trade. And if we make 10% on our account, now we're still making the same percentage-wise, but this is going to be $5,000. Now you can see where I'm going with this. We just rinse and repeat this over and over again. You take the $5,000 and you go get yourself another account. Hopefully you continue to make money. Again, it doesn't have to be this prop firm. It can be any prop firm. I don't want you guys to feel pressured. Okay, but you go and purchase another account, pass the challenge, whatever it is, get instantly funded. Okay, and you just keep buying bigger and bigger accounts. So for example, we could theoretically buy an $100,000 account. With $5,000, we could theoretically buy, three $100,000 accounts. And now we're trading with more and more money until eventually 10% of your account is going to be something like $30,000, right? If you're trading $300,000, okay? Now guess what? You withdraw this money and you go back to trading your own money. Now you can actually have a fully funded, fully yours, no limits, no rules, because let's face it, prop firms have rules for a reason, because they only want the very best traders. So you have a higher rate of failure. If you can successfully manage to trade well, then you can really, really quickly scale your account size, withdraw it from the prop firm, and then just start trading your own money where you have full freedom. And now you've pretty much successfully taken $100 and turned it into $30,000. Now, is this common? No, but if you're trading with $100, this is personally your best bet, in my opinion, and the smartest way of going about it, because you are always only risking $100 of your own money, and all of the risk falls onto other people's money, okay? So that's basically how you can start trading with $100 and over time scale to a $30,000, $50,000, $100,000 trading account. Will it take time? Yes, absolutely. Will it take skill? Yes, absolutely. But is it possible? Yes, absolutely.